What if I told you that skipping just one takeout meal a week could literally turn into $1 million? Sounds impossible, right? But the shocking part is, this isn't some fake get-rich-quick scheme from the internet. This is how ordinary Americans quietly become millionaires while everyone else keeps living paycheck to paycheck, because wealth isn't created in one big moment. It's created through tiny decisions repeated over and over for years. And today, I'm going to show you how investing just $100 every month can eventually grow into $1 million, even if you start with nothing. And trust me, once you understand how this works, you'll never look at money the same way again. Most people think millionaires are born lucky. They imagine rich families, genius business ideas, lottery wins, or celebrities making millions overnight. Social media makes it even worse. Every day people scroll through luxury lifestyles, expensive cars, private jets, giant mansions, and fake influencers pretending to be successful. And slowly, normal people start believing that becoming wealthy is impossible, unless you somehow blow up online or get extremely lucky. But the truth is completely different. Most millionaires didn't build wealth quickly. They built it slowly, quietly, patiently, in fact. Many millionaires live surprisingly normal lives. They don't wear flashy designer brands every day. They don't constantly try to impress strangers online. Instead, they focus on one thing most people ignore: long-term investing. Because real wealth isn't about looking rich. It's about owning assets that continue growing for decades. And the earlier you start, the more powerful the process becomes. That's where compound interest changes everything. Compound interest is basically when your money starts making money, and then that money begins making even more money. At first, the growth feels tiny, almost invisible, but over long periods of time, the numbers become unbelievable. Imagine a snowball rolling downhill. In the beginning, it looks small and weak, but as it continues rolling, it grows larger and larger until eventually it becomes unstoppable. That's exactly how investing works. The beginning feels slow, but eventually the growth becomes explosive. And sadly, most people never experience this because they quit too early. They want instant results. They want fast money. They want success overnight. But the stock market rewards patience, not emotion. That's why wealthy people think differently about time. They understand that even small amounts invested consistently can eventually become life-changing amounts of money. Now let's talk about the actual numbers, because this is where things become crazy. Imagine a young person starts investing $100 every single month into a simple S&P 500 index fund. No risky gambling, no complicated trading strategies, just consistent investing into America's largest companies over decades. Historically, the stock market has averaged around 10% annual returns over long periods. Some years are terrible, some years are incredible, but over time, the market has always recovered and continued growing. Now here's what happens if that person stays patient long enough. After 10 years, they might have around $20,000. Not shocking yet. After 20 years, around $75,000. Now it starts getting interesting. After 30 years, they could cross $200,000. But here's the important part most people miss. Eventually the growth speeds up dramatically because compound interest becomes more powerful over time. Around 40 to 45 years of consistent investing, that account can approach or even cross $1 million depending on market performance and contribution increases. Think about how insane that is. A normal person investing relatively small amounts consistently can eventually become a millionaire without inventing the next billion-dollar app or becoming famous online. That's the hidden power of time. And honestly, time is the greatest financial advantage anybody can have. Every single year you delay investing makes the journey harder because compound interest needs time to work its magic. This is why starting early matters so much. Someone who begins investing at 20 years old has a massive advantage over someone who waits until 35. Even if the older person invests larger amounts later, time multiplies everything. And unfortunately, most people waste their best financial years chasing temporary pleasures instead of long-term freedom. The uncomfortable truth is that most people already spend more than $100 every month on things they barely even remember: food delivery, coffee, random Amazon purchases, streaming subscriptions, impulse shopping. Small daily spending habits quietly destroy future wealth because people never calculate the long-term cost. They only think about the present moment. But wealthy people think differently. Instead of asking, "Can I afford this today?" they ask, "What is this costing my future?" Because every dollar has a hidden future value attached to it. A simple $100 purchased today could have become thousands of dollars decades later if invested properly. That's why wealthy people become obsessed with ownership instead of consumption. Consumers buy liabilities that lose value. Investors buy assets that grow value. And over time, that difference becomes massive. One person spends every extra dollar trying to look successful, the other quietly invests every month. 30 years later, one is still stressed about bills, while the other has investments generating passive income every single day. That's the real difference between looking rich and actually becoming rich. And ironically, most millionaires don't feel rich in the beginning. The early years are boring. You invest month after month while seeing small progress. But eventually, something incredible happens. Your investments begin growing faster than your contributions. Imagine putting in $100 but watching your portfolio grow by thousands, because the money itself is now working for you. That's when the entire game changes, because once your money begins producing money consistently, financial freedom stops feeling impossible. Suddenly, your investments become employees working for you 24 hours a day. While you sleep, the market continues moving. While you work your job, your investments continue growing. That's the beauty of ownership. You stop trading only time for money and start building systems that create wealth automatically. Most people will hear all of this and still do nothing. That's the sad reality. They'll say they'll start later when they make more money, later when the economy feels safer, later when life becomes less stressful. But later usually never comes. Years pass faster than people realize. One day you're 20 years old thinking retirement feels forever away. Then suddenly you're 40 wondering where all the time went. And that's why starting matters more than perfection. You don't need to invest huge amounts immediately. You don't need to perfectly time the market. You don't need to become a financial expert overnight. You simply need consistency, because consistency beats intensity in investing. The market rewards people who stay calm while everyone else panics. During recessions, average people get scared and sell everything. Wealthy investors do the opposite. They continue buying because they understand that market crashes are temporary, but long-term growth is powerful. In fact, some of the greatest fortunes in history were built during economic fear. That's because smart investors understand something average people never learn. Money flows from impatient people to patient people, and patience creates wealth. Imagine reaching your 50s or 60s and realizing your investment account has crossed $1 million, not because of luck, not because of gambling, but because you made one small decision decades earlier and stayed disciplined long enough to let compound interest transform your future. That's the real secret. Millionaires aren't always smarter than everyone else. They're simply willing to think long-term while most people stay trapped in short-term thinking. So the question isn't whether $100 can become $1 million. The real question is whether you're willing to stay patient long enough to let time change your entire life.